out of the way, I want to take a look at the metal market. Now, the metal market does not only reflects metals. We have seen last year precious metal has been the flavor of the month, especially silver. Okay, but I'm going to expand the silver complex to include other precious metals like platinum, palladium, and even take a look at copper. Okay, if you have other metals that you want to take a look, okay, let me know, and I will update those in the next few sessions. Okay, here we are looking at a metal complex here, starting with gold. Now, gold has been in the limelight for many, many years. In fact, all these talks about central banks buying gold only started in 2024, especially in beginning of 2025, where there are persistent reports of central banks buying massive amount of gold. Okay, and that has spilled over into not just the People's Bank of China, okay, which is the central banks of mainland China. We have seen other central banks has also been stockpiling gold, but actually China has been quietly accumulating gold from as early as 2008. Now, what happened in 2008? We have the global financial crisis as a result of the subprime crisis. So China already knew, okay, that the US is on the way down, and there is no more safety holding on to dollar assets. They have been quietly been accumulating gold, and they only went public somewhere in late 2024 and especially in 2025. So we all know that China now is a major, major buyer of gold, okay? And that has caused other central banks to also jump in to also start accumulating gold as a strategic reserve. Okay, so much so that as far as the Bank of International Settlement is concerned, gold has overtaken the euro as the second highest accumulation of reserve by central banks, just behind the US dollars. So will the day come whereby gold occupy the number one spots ahead of the US dollars? For all we know, that could be a trajectory we have to look at. Okay, so overall, the demand for gold is very, very real and very structural, and we can see that there's a lot of delivery as far as COMEX is concerned. Now, we all know that there are two principal markets. Traditionally, we look at London, which is the LBMA, which is the London spot market, where delivery actually takes place. Now, the other one is, of course, COMEX, traded out of New York, where it is basically a paper market, predominantly gold futures. Okay, so what we are seeing this past few months, okay, we are beginning to see that there's a lot of delivery coming out from COMEX, which is something very unusual because usually the futures contract traded out of COMEX do not end up as delivery. Okay, they will always be settled out of in cash. But we are beginning to see something very unusual, which is delivery notice is on the up and up, month after month after month. Okay, so that is the real thing, and we all know New York is a paper market, meaning to say there's a lot of trading that's been ongoing. For every one lot that's been traded in London, there could be thousands of lot traded in New York through COMEX. So COMEX warehouse do not have that much gold. So now we are beginning to see that there has been a shortage of delivery, meaning to say that will COMEX actually one day fail to deliver? If that happens, that will be a technical default. And we are beginning to see that happening in the silver market. So overall, gold looks to be on the up and up. It has been going up for quite some time already. Like I say, if you look at the long-term gold chart, you will see that gold has been climbing since 2008. Okay, now we have a high traded at $4,584 per ounce, basis the February contract. Okay, so we can see this is for February delivery, and prices are beginning to look like it will continue to trade higher. There's a target here at about just under $4,900, and I don't think market will cap at this price. It may actually go out and test the round number at $5,000 per ounce. Okay, so overall, it's very, very bearish. But what we have here currently is until the high here at $4,584 is taken out, there's always the risk of a pullback. And if we do have a pullback, the target is about $4,000 per ounce. Okay, so even if we have a pullback, it is a godsend. Okay, if ever there is going to be a significant pullback in the precious metal market, my view is that it is still very bullish, and I will still I will definitely be looking at the possibility of stacking position, meaning to say I will buy more. Okay. Currently, I have no position in gold, but I do have position in silver. So if there's going to be any significant pullback, I will see it as another chance to buy at lower prices. So overall, the bullish outlook is very, very clear cut here. Here we have silver. Now, silver has actually outrun gold for the whole of 2025. Depending on the products that you are tracking silver with, whether it's a spot or whether it is London or whether it is New York or whether it is Shanghai silver prices, we are beginning to see that silver has actually gone up by minimum 145% compared to gold rise of 64%. So we can see that silver has outrun gold by a factor of 1:2. Okay, so the high traded in silver is $82.67 basis the March contract. Okay, and we do have a challenge of that high at $82.58 recently. Okay, so we can see that the market did not quite take out the high and it does pull back. So what we are concerned here is that there is the rebalancing. Now, every year, the Bloomberg Commodity Index needs to rebalance. Now, the other major index that commodity funds will have to watch will be the Goldman Sachs Commodity Index, together with the Bloomberg Commodity Index. Every year, they would have to rebalance. The rebalancing has already started on the 8th of this month, which is these past few days, okay? And it will end on the 14th. So what happens is that when the index is being rebalanced, we all know that precious metal has outrun, okay, its ranking, its allocation. So if there's going to be any rebalancing of the index, they would have to adjust the weightage, meaning to say they will bring down the weightage for gold and silver, which technically should prompt the commodity funds that track commodities to actually sell their holdings in precious metals to balance out. So by and large, the consensus is that if there's going to be a rebalance, if you are into commodities, look out for cocoa. Cocoa will actually be incentivized to actually trade higher. Okay, so as far as the precious metal is concerned, the common wisdom is that this rebalancing will result in lower precious metal prices. If that's the case, we probably will see lower prices in the coming week itself. So if that is how it plays out, then like I say, it is an opportunity to buy at lower prices. Overall, the shortages in silver is very, very real because silver is not mined for the metal itself. Silver is usually mined as a byproduct when you mine copper, for example. Okay, so nobody will open up and explore the exploration of silver for silver's sake. But the incentive going forward is that the US has actually designated silver as a critical mineral late in 2025. And of course, we all know what happens on the first day of New Year in 2026. China has actually restricted the export of silver. Now, China do not produce the most silver. Okay, that crown belongs to, I believe, I can't remember the country. I think it's either Peru or it is, for all I know, one of those Latin American countries. Okay, China refined the bulk of all silver. So whether the silver is mined in Australia, mined in Latin America, they are all sent to China for refining. So once the silver after refinement, okay, China has put a restriction in export. Okay, so that is causing a worldwide shortage. So we all know silver has dual purpose. It is both a precious metal and an industrial metal. A lot of products need silver. Okay, whether it is solar panels or whether it is the electrification of for the AI purpose, more data centers need to be built, and silver is the best conductor, better than copper. Okay, so there is real needs for silver, but if there's going to be a restriction in export of silver, and the US is looking to stockpile because they have basically designated silver as a critical mineral, that means to say the US will not be exporting; they will be stockpiling. Okay, and that is something that we have to watch. It will create a real structural shortage in the world market, and that means higher prices going forward. So I'm very, very bullish on silver. So if there's going to be a technical pullback, I see that as an opportunity to buy even more at lower prices. Okay. So the other metals that has also been in the headline has been platinum. For too long, platinum has been underperforming gold. Okay, it is still underperforming. Here the pricing here is a bit out. Okay, I forget the update here. The last pricing here is 2,300 thereabout. Okay, so I'm sorry for this boo boo here. I didn't update this pricing here. But basically, silver looks to be again, recovering. So as a complex, the entire precious metal complex is now very buoyant. Okay, there are shortages everywhere, and when they when they impose sanction on Russia, Russia is a major producer of platinum. So those platinum coming out from Russia is no longer in the marketplace because there's a sanction on those. So there is that shortage again in platinum. Okay, so overall the bias is also to the upside. We have palladium. Now the palladium are used for inverters. Those we call that the catalytic inverters used in cars. Okay, and which is one of those rare minerals, and that is also beginning to see that there is a price spurt, okay, that caused these palladium futures to go up to $2,129. It has pulled back very drastically to 1,005, but now it's bouncing back up to 1,009 again. So overall, this is one market you can consider, although the spreads are actually not very ideal for trading. So unless you really have to, okay, I won't recommend trading this particular product because the spread is just not competitive enough. Okay, so we have copper here. Copper is of late, also in the limelight purely because of the AI play. Okay, we all know all this massive build-out of data centers needs a lot of electricity, and copper has always been performing that role. Okay, so again, copper is definitely something that we can consider. Okay, it's at $6 per pound. Okay, so it will likely go even higher. 6.6 is my immediate target for the copper futures here. Mhm. Let me before I go even further. There's a question here. Let me see what's the question. Dennis is asking. Okay, what can cause gold and silver to pull back? I just mentioned one, which is the commodity index rebalancing. That could be one, okay? Because as much that because all these funds, especially those commodity funds, whether they are ETF commodity fund or whether they are hedge funds or whether they are just any kind of fund that actually trade commodities, the way commodity fund is being traded, they would have to base the purchases of commodity based in this index based on the weightage. So if there's going to be a rebalancing which occurs every year in January, so if there's going to be any a major move in any of the components commodities, then commodity fund will have to readjust. Okay, and that's how the mandate works. They have to readjust their exposure to the different commodity based on the rebalancing of the index. So this will be the main thing to watch from now all the way until 14, or which is next week. Okay, so once 14 is over, I think that is the critical date in which we can expect some heightened volatility. The date for me will be January the 16th. Okay, because of that spillover effect. So if there's going to be any kind of technical pullback, it will happen from now all the way to January the 16th. Okay, so that is my opinion. Uh, right, let me continue. Here we are looking at energy. No, energy